Positive signs for the economy. American consumers are spending more in May, adding a big boost to the economy despite escalating trade tensions. Joining us now is Kevin Hassett, White House Council of Economic Advisors Chairman. Kevin, thank you so much for joining us. What do you make of this data, and how do you compare it to the jobs number? The last jobs number that came out was a little bit light. How do you reconcile these two different data points?
Well, I think that the numbers today were really a breath of fresh air. There were a bunch of things that we saw over the last couple of months that were, maybe a little bit in between, not really great, not really terrible. And one of the things that I've been saying, on Fox Business for a little while is that income growth is so high that we expect consumption growth will eventually catch up to it. And when that happens, we're going back to basically the 3% trajectory that we started the year with. And so I think that given that we had revisions to April and a really, really strong May, the consumer is finally, spending those higher paychecks. And what that means is that I think that the market got a little bit ahead of itself worrying about the collapse in growth. I think that right now we're still really on track for a 3% year.
Really? Do you think that we could see things accelerating right here? They're getting better?
Yeah, I think that if you think about it, as you mentioned, there were some uncertainties over the last few months, and almost everything is getting resolved except for right now. I think there's still a question mark about whether we're going to be able to work out a deal with China. But, there's so much upside to what's happened. We've got Mexico agreeing to control the border. We've got USMCA bill, the NAFTA-like thing that we've negotiated with Mexico and Canada that we believe will pass sometime this year. And when you add all that up, I think that there's as much upside risk as downside risk right now. But until we saw really good industrial production, really good retail sales today, we had to wonder. And I just want to say that it's very often a mistake to read too much into one data item. But in this case, we got revision to past spending, and we expect the spending to go up because income growth is so high. And so it's all kind of making sense right now. And I think we're really on track for a 3% year.
Do you think that tariffs are going to be a drag, whether it is the battle with China or anywhere else, whether it has to do with farming or any of the places where we've seen these bumps already happen? Do you think that that's going to be a drag?
Well, I think that what's happened, of course, is that there are a number of tariffs that were put in place that we very carefully designed to put maximum pressure on China while causing minimum harm to U.S. consumers. And the fact that we have really strong consumer spending today, along with inflation numbers that are actually headed south, inflation is decelerating, suggests that our targeting of the tariffs has worked well. And I think that there is a lot of pressure on China to come to the negotiating table. But the fact that we were able to put tariffs on things that we have close substitutes for means that it hasn't really come home to hurt the consumer very much. And now it doesn't mean that there isn't a lot of gain to be had if we get a positive deal with China. So if we open up the Chinese market to U.S. producers, then that's another reason that we could have a big upside of north of 3 in the second half of the year.
Certainly the farmers have been hurt, and we've seen the remedy that Washington has tried to put in place in order to rectify that. The president has tried to make the case that no matter what, Americans aren't paying for the tariffs. There are a lot of economists and other people who disagree with that and say that the companies are passing those prices on. I want to play for you the argument that the president made on that front earlier today on Fox and Friends and ask you for your opinion. Let's listen.
They're manipulating their currency in order to pay for it. They're manipulating their currency lower. Eventually, that's going to hurt them very badly. And they're also giving money to these companies. But what's happening is hundreds and even thousands of companies are now moving out of China so they don't have to pay the tariffs.
Are you seeing evidence of the currency manipulation and the subsidies?
Well, we've seen movements in currencies, and if I were in a court of law, then proving its manipulation is something that would require quite a bit for an economist. But the president's right that the currency has moved, and he's also right that a heck of a lot of Chinese business is moving to other countries, both to the U.S. and to other parts of Asia, especially Vietnam. And so I think what that means is that there's a lot of reasons for the two presidents to sit down at the G20 meeting and discuss how we can go back to where we were, which was pretty close to a deal.
Is that really what the president wants, or is there a push here to kind of decouple the U.S. and China to get those businesses to enact their Plan B and move stuff to Vietnam or elsewhere and to kind of make that relationship a little bit less codependent?
I think that there's a big upside for both the U.S. and for China if we can make it so that the Chinese market is open to U.S. firms without them having to transfer their technology or joint venture with Chinese firms. U.S. firms sell just about as much in China as Chinese firms sell in the U.S., but we have a big trade deficit because China basically makes you make it in China to sell it in China. And so if we can make China sort of join the community of nations and have the same kind of rules that everybody else does, then a lot of U.S. firms will locate more production in the U.S. for sale in China, which will be really good for U.S. workers. And so I think there is a big upside. But where we are right now is that we've put tariffs in place that put a lot of pressure on China, but haven't really put a lot of pressure on U.S. consumers in a negative way. And so, the president is not in a rush to get a deal, but he definitely clearly, sees the upside if we do get one.
But does the president, does he see the upside to having less of a relationship to China? Does he think they've become too powerful in terms of the debt that they hold for other countries, including the U.S., in terms of technology, and holding a lot of countries around the world, and the U.S. to a certain extent, a bit hostage?
Well, China has, played by different rules than everybody else, and that's what we're trying to stop. But President Trump has emphasized that he and President Xi have a warm relationship, and I think that, if that relationship can lead us in a good direction, that'll be great for both countries. But for sure, historically, China has engaged in intellectual property theft. They have engaged in forced technology transfer, and getting them to stop doing that is a really potential big plus for U.S. firms and U.S. consumers.
Okay. Kevin Hassett, thank you for taking the time with us today. We appreciate it.
Bye-bye.